Guys, welcome. So, this year is our Foundation 3. Congratulations to those that have followed us thus far. Hopefully, you've been gaining knowledge from our videos now. We hope to keep delivering and giving you much more better knowledge, of course. So, in Foundation 3, we'll be talking about, actually, we're entering into the markets full time. Alright, so we're looking at how to set our take profits. Okay, how to set our stop loss. Let me use the red marker to represent stop loss, and we'll look at everything in between setting TP and SL. Okay, so this is abbreviated TP. So whenever you see it, just know that that's the meaning. Take profits, SL means stop loss. So I believe in our previous class we showed you guys how to calculate using lot sizes and pips to know the amount of profit you're making from a particular trade. How to calculate pips as well and stop losses. So if you don't know that, then please refer back to our previous video. I'll drop the link in the description. Alright, so what is taking profit in trading? Alright, taking profit is literally an order you give to your broker. Okay, you give an order to your broker and tell them that, oh, I took a trade. Let's say, for instance, the market is going up, right? I believe you can see this. Now let's say you entered the trade at this particular point here. Let me use the blue marker. You entered your trade at this particular point. This is your ENT entry, right? For instance, and then you, of course, you bought the trade, which means you want the trade to keep going up. Now, taking profit is an order which you give it to your broker, and then you inform them or you tell them that, okay, at this particular level, based on my analysis, I'm okay with the profit I would make from this particular point, because my analysis is telling me that I should take my profit, or probably at this point I don't know exactly what will happen in the market, right? But before then, I know that the market will keep going up. So if you get to this point, please automatically take me out of the trade in profits. Okay, so maybe it will be like plus, let's say plus $70 or something. Okay, so this is literally what you're telling your broker. Now, this is for the buy side. Now, let's say your the market is going in a downtrend, right? It's going in a downtrend, and then you happen to probably enter at this point, entry. And you're telling the now, and you want to sell the market. Or, I mean, you're selling, of course. Now, what you're telling your broker is, oh, I analyzed for a sell on this trade, and then the market is going in my direction. So since it's going in my direction, that means my analysis is correct. Therefore, I want to take my profit at a particular, maybe I've seen an indication here that is telling me, okay, market will start reversing once it gets here or something. So please, once I get to this particular place that I've set my level at, automatically exit me from the trade in my profit. So you can either take your profits to the sell side or to the buy side, whichever one. Okay? This is an order you're telling your broker to take for you. So let's say here is a plus, it's a plus $50 profit. Then there is a plus $70 profit. So that's literally, this is literally what taking profits means. There's nothing too complex about it, and there's no two ways about it. Okay? So you've given your broker the instruction to close your trade with you in profit, of course. Now, stop loss or SL. Let's say you finished analyzing, right? And then from your analysis, you're looking at, okay, oh, the price is, market is still going to keep going up, for instance, right? And then you analyze and you're like, okay, there's a little retracement, for instance, there's a little pullback, and you're like, market is going to keep buying. So you entered here, maybe after you see your indications for a buy, and then prices now starts going up, but then starts pulling back down, right? So stop loss, let's finish stop loss now. Stop loss is an order which you give your broker. Oh shit. Stop loss is an order which you give your broker, right? So you're telling them, okay, my analysis is for a buy at this particular point, okay? This is where I'm setting my TP. Let's use the same instance, the same plus $70 instance that I showed you earlier. So now you're telling your broker, okay, this is my analysis on this trade, but if this market should come below this particular zone, which means my analysis is therefore not correct, please exit me in loss. Let's say here is like $30, for instance. You're telling your broker, please exit me in my loss of $30, minus $30. I'm okay with the fact that my analysis is wrong, and therefore I have to pay the price. So please just take me out with minus $30. I don't want you to keep eating into my capital. So at this particular point, please exit me from the trade. This is basically what stop loss is. All right. Same thing going to the sell side. Let's say you analyze market is coming down, right? It's a downtrend, and then you analyze for a buy. Maybe after seeing an order block or something, a fair value gap or whatsoever it is, it's a demand zone. And then you're anticipating a buy. So you took a trade, you took your entry. Let me use the blue marker. Let's say you took your entry from this point here. Then you said, oh, you want to target this particular high as your take profit zone, TP. Let's say you want to be in profit of, let's say $100. But then you now say, okay, should in case my analysis is wrong, yeah, please exit me a loss here. This is SL. Yes, I'm okay with the loss I'm taking, probably a loss of minus, let's say $40. Please, should in case my analysis doesn't go as planned, all right, should in case market starts reversing, because I entered for a buy, should in case the market starts reversing back, please exit me a loss of minus $40. That's the amount I'm willing to risk on this particular trade. So setting TP and SL is good because it's not every time you will be active, like actively looking at your chart. You know, sometimes we're busy with work and all that. So it's always good to have your TP and SL. And these are handy tools. Okay, so these are basically the major markets, let's say market tools per se. Yeah. The major market tools we're using, or you should be using as a trader. I mean, some people do trade out there without setting take profits and stop losses, but I don't really think it's healthy. And even if it is, you ought to be looking at your chart like 24 hours. If you don't want to blow your account, I mean, if you don't want to blow your account, then be my guest and use your trades without stop losses and take profits. So there's what we call order types. There are types of orders. Let's say order types. So there are basically several types of orders you can give to your broker. I told you your broker literally allows you to trade in financial markets, right? They give you leverage to trade there. So these same brokers, you literally have control over what they do for you. All right. So that's why these other types come in. Like I said, they're there to assist you, okay, to give you leverage to trade in financial markets. So there are basically different types of orders. There's the buy limits, there's buy limits, there's sell limits, there's buy stop, and then there's the sell stop order. Okay, there are more though, but these are, let's say, trailing stop. There's a trailing stop. There's the buy stop limit, sell stop limit, but for now, just let's get conversant with this. Okay, and then market execution. Okay, are you guys with me? Well, I hope you are. I mean, obviously, it's not like you can respond or something, but so these are basically the order types, the market order types. Okay, so my marker's always falling. So this is the only, okay, all these ones here are pending orders. These ones, right? From here, these four, they are what we call regarded as pending orders. They can only be triggered under condition. Okay, so some certain conditions must be met before these trades can literally trigger. The only one that triggers with zero condition is the market execution. So I think let's start from there. So a market execution is a condition or a situation where you tell your broker that, oh, I've seen this trade, I've seen this setup, and I'm okay with it. Please take me in instantaneously. Let's say the market is going in a downtrend, right? And then I've seen a particular, let's say I met the market at a key region down here. And because I don't want to miss on my entry, I'll literally enter for the trade instantaneously. I'll tell the broker, oh, I'm okay where the current price of the market is. Please book me in for a buy instantly, because that's what I'm expecting. So it depends on the reaction you see. If it goes up or it comes down, it's nobody's business, right? It's just based on what you're telling your broker. They follow your instructions. So if you're telling them to book you in for a buy instantly, they'll book you in for a buy. If they need to book you in for a sell, they'll equally book you in for a sell. That's called the market execution. Alright. Subsequently, I'll use my MetaTrader and then I'll show you all of these stuffs. Okay, but I just want you to see like practically. Alright. So this is what we call the market execution. Now, I told you the other ones are pending orders, right? Please, if you're confused in any way in this video, feel free to go back, right, and rewatch it. Or you can use the comment section and then type out where you're confused, and then I'll definitely get back to you. Okay? So, we're done with market execution. Now, I told you these ones are called pending orders, right? Let's start with the buy limits. So, a buy limit is an order where obviously the market has to be going in the downtrend first. Okay? It has to be going in the downtrend. It can be going in an uptrend anyway, but what you're saying while setting this limit order is that if price is coming in the downtrend, eventually you've marked out a point already and you're waiting there. You've set your order already. So even if you're online, you're offline, it will trigger automatically. Okay? You set an order and you're telling the market this is buy limit. And you're telling the market, please, the price is up, the market is selling at the moment. Please, if it comes down to this level, even if I'm online, I'm offline, I'm there, I'm not there, please book me for a buy automatically. Now, mind you, with the knowledge of lot size and pips, you'd have filled it in already. The lot size you want to use, the pips, I'll still show you how to do that subsequently. But then the market is looking for a buy instantaneously because that's what you're expecting. Okay? So if that's the reaction you get, good and fine. If the market keeps going down, then you'll be in losses because you're already placed for a buy. Okay? Sell limits is the other way around. Let's say the market let's say the market starts going in an uptrend. Okay? Now you place a sell limit here. Maybe you've seen an indication previously that is that you're sure of and you're like, okay, if this market gets to this point, please book me in for a sell limits. Sorry, is interlocking with this stuff. Book me for a sell. So by the time market comes up here to this point and it starts selling according to your analysis, according to what you've placed, starts selling, you'll be in profit. Okay? But if it starts buying, then of course, obviously you'll be in losses. But this is what you're telling your broker. Like I said, your broker only acts based on instructions. You can go back to your MetaTrader and practicalize this so that you will see it clearly. Okay? So this is basically the function of the sell limit and then the buy limit. So I think we've covered these two. Like I said, buy limit is an instance where you're giving a situation where you're telling your broker that, okay, if price gets to a particular level, please book me in for a buy because I've seen multiple indications that price is going to the upside after reaching a particular zone. So please book me in for a buy. All right, you set your stop loss, your TP, whichever one. Okay, same thing with SL. Price is going up, but I'm very confident that once price gets to this point, it will start selling. And then you set your sell limit as well. So this is it for sell limits and buy limit orders. The other two, buy stop and sell stop. Okay, these are the major ones we'll be looking at: buy stop and sell stop. Like I said, they're still under the pending orders. So buy stop is a situation where I should have used the other chart. Okay, anyways, let me switch right back. So this is it. Let's say in an uptrend. Okay. Remember, you said if you want price to get to a point, you set your sell limit and then sell limit, and then the market should automatically take you in for a sell. If it keeps going up, that means you'll be in losses, right? I hope you remember. Now, what buy stop is trying to tell you is, okay, I've seen the markets moving up. Right? Let me just this sell limit. Then buy. Okay, let me use sell stop so that it will be in line. Okay. So sell stop now is an order that you give to your broker. Okay, the price is going down. Okay, let's say I've marked out a key region here. Now, if the price or if the market should break this my region and keeps going down, please book me in. Let's say here, for instance, this is your sell stop. Which means you want to continue with the trend of the market. The market should book you in for a sell automatically. So now, if this market comes here and it starts reacting and starts buying, you'll be in loss. But if it keeps going down, you'll be in profits. I don't know if you guys understand. Well, like I said, you can't answer, but I'm thinking you don't. So let me go back again. Now, your market was buying, right? Was going up. And then you set a sell limit, telling your broker that, okay, if price gets to a particular place, please book me in for a sell. And then automatically you got in for a sell. Let's say the market eventually starts retracing according to what you analyzed. And then sell stop, you're looking at a region. Let's say here is what you were looking at. So you're like, okay, I'm skeptical. I don't know if this region will hold price. The price will keep going up or something, right? Then you said, okay, let me set a sell stop here. So if price breaks through this region, it should automatically take me in for a sell. All right. So this is more like a continuation. Okay. So yeah, this is more like a continuation. So if you see price coming down and then you pick a sell stop, it means you want to continue with the flow. If you set a sell limit, it means you want to trade the reverse. It was going up, now you want to start going down. That's sell limit. Sell stop means it's going down. Please take me in as you're going down as well. Okay? I hope that has been clarified. So the next one we're looking at is buy stop and buy limits. The buy stop and buy limits. Should I give you guys a little time to process it? Okay, you can pause it if you want more time. So, buy limit, I told you, is when the market is coming down, right? The market is coming down, and then you see a key region you're interested in that has lots of confluence, and you're like, oh, please book me for a buy. This is your buy limit here. And then market picks you. Let's assume all the trades are going in our favor or based on our analysis, and then you start going. So now you're building the profit. Now, just like the reverse of sell stop, buy stop is still a continuation. Let's say price is going up and there's a region, let's see, a region around here. You want price to break through to be sure if it's going to reverse or it's going to keep going up, right? So price comes and then breaks through that region and still keeps going up to the upside. Now what you can do is to book a buy stop here. For instance, let's say you book a buy stop here. What you're telling your broker is, if price comes here, right, obviously it's going to keep buying based on your analysis, right? Please take me in for a buy automatically. So if price is coming up, please pick me up and let's flow together. Okay, so this is basically buy stop and buy limits. I explained sell stop and sell limits. I equally explained market execution. So these are just the major ones we need to focus on. The others, though, like I said, these are just the major ones we need to focus on. Then trading stop. I almost forgot you. Trading stop. This is, I think this is normally on, I see mostly on exchanges, Bybit, Mexi, and Rent. I've not used it on my MT, my MT5, my MT4 though. I've not even checked. So, trading stop is equally an order which you give your broker. I hope the whole thing is not looking or sounding too complex for us, right? So, trading stop is literally an order you give your broker to protect your profits. So let's say price is moving up, you have a retracement or a pullback like this. So you could set your trading stop to be accompanying your trades in any given direction at all. So which means if let's say I took my trade here, I entered for a buy here, and the price is going up, right? There's a little retracement and it keeps going up. My trading stop will be protecting my profits. So if the price is going up, my trading stop will be here. If it's going up here, my trading stop will advance to. So you set the amount of pips you want it to be following like protecting your profits on. If it gets here, your let's say your trading stop will be here, right? So in case it doesn't get to your full tip, let's say your full TP is up here. Full TP is up here. But then price somehow doesn't touch it.